Bitcoin has finally made a strong move higher, now up 10% in 2026 as we inch closer to retaking 100K. Is this the beginning of a sustained move higher and the final nail in the coffin of the 4-year cycle? Or is it just another bear market rally before one final collapse to new lows? Plus, there's no ignoring that gold dramatically outperformed Bitcoin in 2025, but maybe it's not for the reasons most people think. Today, we dive into a critical insight hiding in gold's move that explains why Bitcoin stalled and why that may change dramatically in 2026. And finally, shockingly overnight, the Iranian Rial completely collapsed. It's just the most recent example of fiat currencies going to zero. And we discuss why all roads keep leading back to the same conclusion. There's no substitute for sound money. Welcome to No Second Best, the show where conviction meets reality, and reality keeps pointing straight to Bitcoin. I'm your host, Hurley. Now let's get into it. Bitcoin is up meaningfully to start 2026, as we went as high as $98,000 yesterday, and are now hovering around $95,000 at time of recording. And importantly, this move hasn't been driven by leverage chasing momentum. We have had a decent chunk of shorts liquidated on the way up, but much of this price move has been driven by spot demand. And that matters because it tells us who's buying. Real capital, not tourists with borrowed money. Funding rates went negative while price moved higher. Now, this doesn't mean that risk is gone, but it does mean the character of this move is different from the ones that fail quickly. And this is where the familiar debate resurfaces. If you've been around Bitcoin long enough, you recognize this moment. A strong rally after a 30% correction signals momentum is returning. And immediately, the same question comes up. Is this the bear market rally before the real dump begins? And that question isn't irrational. It does have historic roots. For years, Bitcoin trained us to expect clean 4-year rhythms: halving, mania, crash, repeat. But markets do evolve, and when narratives start breaking down, it's usually during periods like this, when price refuses to behave the way everyone expects. Which brings us to our first clip. Joe Carlasare joined Natalie Brunell on Coin Stories, and I think he articulates the current tension in the 4-year cycle narrative really well.
I'm a big believer in the cycle being dead. I think the cycle has been dead for a while here, even going back to 2022. So the fact that we didn't hit this ultimate peak in the marketplace, that doesn't mean that we can't be higher this year and higher the year after that. I think the cycle theory is dead, and we can get into that. But the other issue, I do think the treasury companies, that took a lot of the wind out of the sail of money. People were thinking, well, it's a bull market. I'm going to go into these treasury companies, which are just leverage plays on Bitcoin. And because of that, that's depriving capital organically of the Bitcoin marketplace. A good thing in the long run. In the short term for Bitcoin price, maybe a little bit of a headwind. And then the final complicating factor, I think, is that you have this, you have this notion, I call it sort of a myth of the 4-year cycle, right? And this idea that we have to peak out in October, November of with the year after the halving, right? This is something we're digesting. We're working through it. And I think it's very optimistic because once that dies, once Bitcoin truly is understood by the retail masses as sort of an institutional asset, I think it's going to send us much higher in this year and in the next year. But I'll just tell you anecdotally, because we were talking before camera came on about some of my experience. I play poker with a regular group of guys. They're involved in a lot of different assets. They're in crypto assets and broader, Bitcoin, some Bitcoin exposure, but mostly crypto assets. And what they all told me is they all sold. I was the only guy at the table in this regular game who had still held as of December. We're recording here in January. In December, I was the only guy. Everybody else is the cycle's dead, or the cycle is over, Joe. You got to pack it up because we're going into some big bear market. And what I always respond to them is, if you all thought there was going to be some explosive, high growth Q4, and that didn't come, right? We kind of peaked out really early in Q4 and wasn't really explosive at all. It wasn't bubbly in my estimation. Then why do you expect a big 70, 80% drawdown? And I think that money flows in. I think it's just waiting on the sidelines, waiting to buy back in. The capital hasn't permanently left the space. So it's really exciting. Like, the death of this 4-year cycle theory is going to be massive, particularly when you look at the broader economic picture that is really bullish.
What Joe is really getting at here isn't that cycles never mattered. It's that expectations have changed. We never saw a euphoric blow off top in 2025. There wasn't a final speculative frenzy that had to be punished. Capital didn't permanently flee the space. Instead, we saw something much quieter. Rotation, hesitation, and stagnation. Money didn't disappear, it seemed to be waiting on the sidelines. And while Bitcoin has been in this long consolidation, that waiting capital found somewhere else to go, which brings us to gold. Now, everyone knows gold had a historic run in 2025, and this fact has many Bitcoiners almost embarrassed by how much it outperformed their beloved orange coin. But gold outperformed because when uncertainty rises, capital often runs first to the asset it already understands. Gold is very liquid and also broadly understood, and so it feels much more familiar than Bitcoin. Gold sits inside central bank balance sheets and institutional mandates. So when macro pressure builds, gold often moves first. not because it's better, but because it's recognized. Joe also explains something that helps make sense of 2025 in hindsight, why Bitcoin stalled while gold ran, and why that divergence likely won't last.
The other thing I did think was a headwind for Bitcoin, which is rather unexpected by people this year, is the move in precious metals. I do think that gold getting moving, and it's part of what Luke's talking about. Like if you listen to Luke's podcast about this, Luke Groman's podcast, he's talked about like how, gold's performing very well. Why isn't Bitcoin? Well, there's various different factors in play that the assets are not comparable. I view them very differently as assets. But my point is when you see a shiny moving object, pun intended, money's going to go there. There are portfolios that literally will fast money that will just chase what's moving. And that has this compounding effect. So if Bitcoin's not moving and gold, which is understood and, it's held by central banks, it's not as quote unquote risky as people perceive Bitcoin is. To me, like that's just explaining. You're taking flows that would go to Bitcoin from retail frenzy and they're putting them in the gold. So why wouldn't you expect one to underperform?
This is where the story gets more interesting. When you zoom out and look at gold absorbing demand quietly for years before its breakout in 2025, a clear parallel starts to emerge with Bitcoin today. That's the framework Matt Hogan lays out, and it changes how you understand gold's run and what it may be signaling for Bitcoin next.
I mean, the ETFs are absorbing the selling of OG and traditional investors, and it's just a ratio. The thing I often point people to because of what happened last year is actually gold. Everyone knows that gold had a tremendous year in 2025. It soared to new all-time highs. It ripped. It was the best performing asset in the world. And when people note that, they say, what drove it? It was central bank purchases. But if you actually look at the data, Nate, what you see is central bank purchases ramped after the U.S. seized Russia's assets. And they went from about 400 tons a year to 1,000 tons a year. That's a lot of gold. So in 2023, central banks bought 1,000 tons of gold. The price didn't do much. In 2024, they bought 1,000 tons of gold. The price didn't do much. In 2025, they bought 1,000 tons of gold, and gold went parabolic. And the reason it took 3 years is because of those first 2 years, there were existing holders who were willing to sell. And they were willing to sell, and miners were willing to sell. And then they ran out of gold to sell. But the demand was still there. And when that moment happened, the price went parabolic. So I think what we saw in 2025 is you had institutions playing the role in crypto that central banks did in gold. Persistent buying demand. You mentioned the statistics, buying more than 100% of the supply. And you had some existing people that were willing to sell. And maybe in Q1 or Q2 of this year, they'll continue to be willing to sell. But it's not an infinite supply. At some point, they will run out. And Bitcoin will have the same experience that gold did in 2025, which is I think the price will go parabolic. And to me, it's just a matter of time as long as that institutional demand persists. And I expect it to not only persist, but accelerate because you have all these platform approvals and other things happening.
Gold didn't go parabolic the moment central banks and institutions started buying in size. That demand showed up years before the price did. Why? Because there were still sellers. Gold had a deep liquid market willing to meet that demand for a long time before supply finally tightened. Does that remind you of something? Bitcoin has been going through something very similar. Over the last few years, steady institutional and corporate demand has been building through ETFs, treasury allocations, and structural products, while long-term holders have been supplying that demand. And so I think this explains pretty clearly why price didn't explode and instead consolidated for all of 2025. And here's the critical difference. Gold is now an over $30 trillion market. Bitcoin is only around $2 trillion today. So when marginal demand finally overwhelms marginal supply in Bitcoin, the price response won't need several years like it did in gold. In theory, it'll need far less room. That multi-year delay we saw in gold could translate into a much shorter window for Bitcoin. Now, let's bring this out of the charts and into the real world, because something far more important and catastrophic happened this week. The Iranian Rial, their fiat currency, completely collapsed. And not for the first time, but as the latest leg in a currency that's been breaking down for decades. And it's moments like this that cut through every abstract debate. When a currency fails, the question becomes very simple. How do you leave? What do you carry? What actually holds value when borders close and trust evaporates? And Vijay Boyapati, the author of the legendary Bullish Case for Bitcoin, explains this better than almost anyone.
Gold failed because it has this Achilles heel that it's physical. And the physicality of gold creates a few problems, and one is like the centralization of like where people hold their gold. because it's very cumbersome to move gold around. So what happened was gold kind of became centralized in a few banks, and it's difficult to take possession of large amounts of gold. It's scary and it's risky. And where do you put it? Under your mattress? You don't want to hire like a whole army.
Well, is it real? I always think, is it real?
No, exactly. Verifiability, like there's a lot of fake gold. That's another part of the problem, the physicality of gold. Gold as money was the closest thing we've come to an immutable political economic institution in human history. I think Bitcoin gets us there. It gets us to an institution which could be immutable, and that's the radical part about Bitcoin. It's the fact that it's kind of boring money. Yeah, that seems like it's not that important, but the fact that it can't be changed or manipulated and it can't be politicized, that's the radical departure from the past.
Yeah.
There is a certainty to owning Bitcoin that you can't get really anywhere else. And a long time ago, like I referred to this before, when I was a gold bug, I bought some gold coins in like kind of not an online exchange, but like we have Craigslist in America, which is like a service where you can buy and sell things, and you just post an ad saying, "Hey, I'm selling this." And I remember actually how scary it was to go and buy a gold coin, because like you don't know if it's real. And actually the person on the other side who's getting dollars doesn't really know if the dollars are real. Like they could go to a bank and verify it, but it's like inconvenient. Whereas Bitcoin, if you trade something for Bitcoin, you have absolute certainty that you got the Bitcoin. Like you can look at your node and look at the network and see the confirmations. That level of certainty is something that's very unique to Bitcoin.
If you're actually living through something like this, whether it's in Iran or Venezuela or anywhere else, the difference between these assets stops being abstract really fast. Gold and silver sound great on paper, but in the real world, they're heavy, they're visible, and the moment you try to move with them, they draw attention. Bitcoin is completely unique in this way. It doesn't sit in your bag, it doesn't need to cross a border with you. You can carry your private keys in your memory. And when money is breaking down around you, that difference isn't philosophical. It's a difference between having an exit and not having one. So when you start thinking about Bitcoin this way, not as something you trade, but something that you rely on, the question stops being when do I buy and becomes how do I buy this strategically and hold it responsibly? Because owning Bitcoin long term isn't just about price exposure. It's about custody, it's about security, and eventually it's about what happens when you're not around anymore. And that's why Swan Private exists. The Swan Private team is focused on real Bitcoin ownership, things like advanced multi-sig custody, inheritance and estate planning, and helping you think clearly about Bitcoin accumulation strategies across decades, not cycles. To learn more about Swan Private, visit swan.com/nosecondbest. So where does all of this leave us? Bitcoin's back near 100K. Gold obviously made its move first. Institutional interest is still early, not late. And around the world, fiat systems keep showing their cracks. Short-term price is going to do what it always does. It'll move, it'll shake people out, it'll test patience. But the longer-term picture hasn't changed. Bitcoin is still the most portable, verifiable, and incorruptible form of sound money we've ever had. And I'd argue it's the most undervalued asset on the planet today, and that's by a wide margin. And that's precisely the part that gets lost when most people focus too much on the next candle. And it's why regardless of what the chart does next, the conclusion stays the same. There is no second best money. But what do you think? Has gold already handed the baton to Bitcoin? Or do you think the consolidation still has more work to do? Leave your thoughts in the comments. And if this episode helped clarify some things, hit the like button and share it with someone who's still confused about gold versus Bitcoin. And don't forget to subscribe to the Swan Bitcoin channel if you haven't already, so you don't miss the next video. Thanks for watching, and I'll catch you next week.